Hey everybody, Tim Albrecht here, and thank you for listening to the YFP podcast, where each week we strive to inspire and encourage you on your path towards achieving financial freedom. This week I had a chance to welcome back onto the show David Bright and Nate Hedrick, co-hosts of the YFP Real Estate Investing podcast. During the interview, David, Nate, and I talked through 0 to 1, how to get started in real estate investing and make the hardest move, which is that first move. Some of my favorite moments from the show include David talking through the main categories of real estate investing and why he and Nate have favored buy and hold investment strategies, a discussion on individuals you may consider surrounding yourself as a part of your team as you begin your real estate investing journey, and strategies for finding and evaluating an investment property. Make sure to hang with us to the end of the show when I ask David and Nate frequently asked questions for those getting started in their real estate investing journey. Now, one of the things that we talk about on today's episode is why getting the financial house in order is such an important and crucial first step before diving into real estate investing. And so that is a great opportunity to highlight what I think many folks may not be aware of, which is the incredible work that the team at YFP Planning does in working one-on-one with more than 240 households in 40 plus states. YFP Planning offers fee-only high-touch financial planning that is customized to the pharmacy professional. If you're interested in learning more about how working one-on-one with a certified financial planner may help you achieve your financial goals, you can book a free discovery call at yfpplanning.com. Whether or not YFP Planning's financial planning services are a good fit for you, know that we appreciate your support of this podcast and our mission to help pharmacists achieve financial freedom. Okay, let's hear from today's sponsor, and then we'll jump into my interview with David and Nate. This week's podcast episode is brought to you by Insuring Income. Insuring Income is your source for all things term life insurance and own occupation disability insurance. Insuring Income has a relationship with America's top-rated term life insurance and disability insurance companies, so pharmacists like you can easily find the best solutions for your personal situation. To better serve you, Insuring Income reviews all applicable carriers in the marketplace for your desired coverage, supports clients in all 50 states, and makes sure all of your questions get answered. To get quotes and apply for term life or disability insurance, see sample contracts from disability carriers, or learn more about these topics, visit insuringincome.com/your financial pharmacist. Again, that's insuringincome.com/your financial pharmacist. David and Nate, welcome back to the show.
Hey, Tim, always great to be here.
Yeah, thanks so much.
So first of all, guys, congratulations on the work that you've been doing with the YFP Real Estate Investing podcast. You've crossed the 50 episode threshold, which is really an incredible accomplishment, and I think just speaks volume to the commitment of time and energy and effort that you guys have put in. So thank you so much for that. And it's been fun to see the reception among the pharmacist community in terms of the focus here on real estate investing and the community of pharmacists. And I think that's a good segue. I'd love to hear from you guys just for a moment, an update on what you've been up to. When we talked last at the turn of the year, you guys were just getting started with the none-to-one group coaching program to help folks begin their journey in real estate investing. So David, Nate, would love to hear the update of how that course has gone and what you've been seeing.
Yeah, we've had a ton of success with that. It's been really fun to bring together this group of pharmacists that are really eager to buy their first investment property. We actually ended up taking on 10 pharmacists, and we've been meeting every Sunday for the past, 2 months now, David. And it's been going really well. It's a really cool class of individuals. It's been a great time to talk to everybody and learn along with them, right? Like, we're there to teach and kind of coach, but at the same time, there's always more that we can learn. And so it's been really interesting to have problems brought to us, and we're dealing with people all over the country. So it makes David and I expand our horizons a bit. It's been really enjoyable.
Yeah, it's also been a lot of fun to see the victories come out too, right? The problems are one thing, and the problem solving is like inherent to pharmacists, that we enjoy that, right? But the victories are also a lot of fun, seeing folks get offers accepted and move through inspections, and conquering that investing world has just been really inspiring to see other pharmacists jump into that and do that.
And we're excited to hopefully share more of those stories into the future and be able to offer that out to other pharmacists as well. So really appreciate you guys and the commitment you're putting in of time. You know, we're recording here on a Monday early morning. You guys were up last night with that group. I know it's got energy and enthusiasm that you're putting into it as well, but it is an investment of time. So thank you guys so much for that work. So this is a follow-up to episode 241. So we talked before, and we'll link to that in the show notes, about some common objections and barriers to getting started in real estate investing. And the idea with this episode is that for those that have worked through or are working through some of those objections and are ready to make the move, what should they be thinking about in terms of going from none to one, right? That hardest move that we often hear folks talk about in the real estate investing journey. So let's get started. I want to jump in and talk about the importance of having a strong personal financial foundation. Wouldn't be a YFP podcast if we didn't talk about that. So getting your financial house in order is such a critical first step before you go on that journey to invest in real estate. So let's start there. Nate, tell us more about why you and David emphasize this concept so often on the YFP Real Estate Investing podcast, as well as for your own personal journey, why this has been so important.
Yeah, and it's something we reinforce all the time, right? Even speaking of the none to one, like the very first half of the first class was all about like, okay, you need to establish your own financial house. And if you don't, then we need to take a pause and reset, because without that, right, nothing else can really track from there, right? We need to make sure that our own financial house is in a state where we can feel comfortable investing, and that investment decision is not going to be make or break, right? We are very risk averse, safety oriented pharmacists, as David and I like to say. And with that comes the concept that you need to be in a position where if things don't work out perfectly, you're going to be just fine financially. These are decisions we're making not in a do or die situation, right? We're trying to buy these properties or invest in a way that it supplements our financial plan rather than is the make or break piece of it.
Yeah, and there's a lot of just potential instability or seeming instability in terms of real estate investing versus a lot of other types of investing. Kind of like in your personal budget, if you're saving up for a car, you might be putting away money every month and eventually that car happens. There's the same kind of thing with a real estate investment. If you may need to save monthly for a roof replacement or save monthly for a furnace replacement that's coming at some point, though those kind of things may be a little harder to plan for. So those evictions, late rent, there's just a lot more instability. And so having a firm financial foundation beneath you means that you can weather some of those storms and deal with some of those ups and downs of real estate, knowing that in no month is it ever coming out perfect, that all of the bills just perfectly line up. But over time, hopefully it averages out to something that ends up being a good investment.
And there's lots to dig into, of course, in that topic and that umbrella of building a strong financial foundation. We're not going to do that here today because that's what we do every week on the show. But I would point folks to episode 212, where I talked through some of the components of building a strong financial foundation. What does that exactly mean? And why is that so important as you begin your real estate investing journey? So we know that real estate investing is such a broad umbrella. And I think that's one of the things you guys have done such a nice job on the YFP Real Estate Investing podcast, is really introducing folks to the variety of different ways that they could invest in real estate. But I think that because it's so wide and because there's so many options, that can be intimidating for a new investor. So David, tell us more about how you and Nate break down real estate investing and what categories might be easier for first-time investors as they get started.
Yeah, there are plenty of different avenues for real estate investing, kind of like the profession of pharmacy, many different ways that you could practice pharmacy. As far as real estate investing goes, Nate and I like to break this down into buy and hold real estate investing, where you just buy something, you rent it out long-term, or flipping real estate, where you buy it, you may fix it up, and you may quickly then sell it. And you could apply those terms to single-family houses or multifamily apartment buildings or storage units or vacation properties or so many different categories. But just to make things pretty simple and to stay with areas of investing where people have some general familiarity, oftentimes just from buying their own primary residence, we talk a lot about the single family buy and hold long-term rental, where you're simply buying a house, presumably a lot like what you live in, and renting that out to someone else. So that simplicity and the clarity of buying a single family house seems to be one way that people can make an easier jump into real estate investing. It seems just a lot less intimidating to go buy a single family 3-bed, 1.5 bath house than it is to buy an apartment building or buy a strip mall or buy a storage unit complex or something like that. There's ways to dial back the intimidation factor that way.
And at the same time, we've got a lot of people that come to us and say, Nate, I want to buy a vacation rental anyway. Tell them about this short-term rental thing. Can we do that? And so there are other ways to get more adventurous with it if that's what you want to go, where you can buy a property that you can use on the weekends here and there as a vacation property, and then rent it out the rest of the year. We also see people, and we've talked to individuals that are house flippers or even wholesalers, where you're taking basically a great deal, putting some capital into it, or maybe very little capital into it, and then flipping it to someone else. So that there are lots of options out there. And just like David said, it's as diverse as pharmacy. The term real estate investing is so broad. There's so many different avenues you can walk down.
Yeah, for folks who haven't yet listened to the many great stories on the real estate investing podcast, this is one of the areas that I love that you guys have done. You've, I think, really focused intently on the buy and hold strategy, David, for the reasons that you mentioned, but you've also featured it and sprinkled some other areas to show the diversity that can be there. I'm thinking about the recent episode 46, where you had on Stuart and Elizabeth talking about motel hacking. I know you've had a couple folks talking about short-term rentals. So certainly a lot of buy and hold, more that traditional investing stories, but other avenues that folks may be thinking about as well. Now, I've heard you both talk a lot about the team aspect of real estate investing as a way to bring down the stress, reduce the barriers to entry. Nate, do you mean investing in partnerships when you talk about the team, finding a mentor, or something else altogether?
Yeah, and it's kind of a little bit of everything, right? There's nothing wrong with a partnership or a mentor, but a lot of times we focus on just building this team around yourself that can help. And it can be something as simple as the YFP community, right, as part of your team. You've got people that are helping you out, supporting you in those decisions, helping make things just a little bit less stressful. But really, truly, that team that surrounds you starts with like a good real estate agent, someone that has your fiduciary interest and making sure that you're going to be successful. And really, as that starts to expand, then your team can expand as well. And so, when we talk about building a team, it sounds really intimidating. And so we really try to focus more on starting with really good core individuals around you and then expanding from there. And as you build your confidence and as you start to expand what your kind of projects you're able to take on.
Yeah, and that's absolutely how we got started too. We started with the realtor from our own investing, and that realtor helped us. The first property that we bought, we needed someone that knew plumbing because there was a plumbing issue. So I asked the realtor for a contact for a plumber. The realtor offered us a few different contacts. We were able to find a plumber. From there, we needed someone that could do drywall, reach out to the realtor. And so our team grew very organically just in terms of reaching out to that realtor. Even when it came to an insurance agent or a property manager, those connections all happened just from that initial networking through that initial realtor and then contacts from contacts and going from there. Even like Nate mentioned on the Facebook group, online connections, online networking, other local real estate meetups. We were able to over time add a bookkeeper and a tax accountant, an attorney and lenders and other folks from there. So, absolutely, that can sound intimidating on the front end of this enormous team that feels like is necessary when you listen to podcasts and read books. But for us, it just started out with a realtor and one foot in front of the other, finding one contractor at a time as we needed people on our team, growing that organically.
Love the simplicity of that, David. I've heard you and Nate mention that before is I think folks often hear stories of investors that have been at this for several years and they've got that team, right? They've got contractors, they've got insurance agents, they've got property managers, they've got on the financial side, whether it's bookkeeping, individual financial planning, tax side, they've got attorneys, they've got, a team that has really been built over time, but they didn't start there. And so I think that step of my team and having that team in place can often paralyze folks if that's something that they don't think, oh, well, maybe I can start with one individual. What if I start with a really good, realtor that can help me take that step forward? That's feasible, that's manageable, and then I can build my team out over time. So if I'm listening and I've narrowed down the type of real estate investing, let's say I've determined, what type is a good fit for me, at least to get started. I've thought a little bit about the team or finding that agent who's going to help me over time build out that team. The next question I think that comes to mind, especially in the current market, is where does one find a good investment property? So am I leaning on my team here? Am I doing my own search on Zillow? Nate, what are your thoughts here?
Yeah, I think it's a common question we get. And I think the misconception that comes to us often is the only way to find a good investment property deal is off market. Because especially if you listen to some of the bigger players, people that have been doing this for a long time, they found some of their best deals off market, but that's not the only place to find them. And so I think, again, that's another intimidation factor that David and I really focus on dispelling, is that there are absolutely deals that you can find on Zillow, on the MLS, through your real estate agent. You can go off market and there's advantages and disadvantages to doing that, but you don't have to. So even something as simple as connecting with a good agent, getting an MLS auto email set up. And what I mean by that is you put your criteria and your budget into the system, and every morning you're going to get an email that says, here are the houses that meet your criteria. And starting to understand your market, you'd be surprised at how quickly you'll start to find a deal because now you know everything in that market. And so when a property pops up, now all of a sudden you know, oh yeah, that one's worth looking at, or no, we can skip it. That's not worth our time. And it just makes that deal finding so much easier. We were actually just talking about this last night on the None to One course about an individual that's like, I know there's exactly 10 duplexes available in this particular area. When the 11th one pops up, I know what to do in terms of whether or not it's worth offering on. And that is how you really understand the market. And when a good investment property comes along, you can really take action on it.
Yeah, I think that's really important. One of the things, Nate, that you said there was the word criteria, right? I think that makes it so helpful for a real estate agent that you're working with when you just say, I'm looking for a great investment property. The realtor on the other side of that is like, what precisely do you mean? What am I looking at for you? Like that can be really puzzling. But if you're saying that I'm looking for a duplex between this street and this street around this school, when you can be that clear at this price point, I want one half to be vacant, one half to be tenanted because I want to move in and house hack. Like whatever those criteria are, the more precise and specific that you can get for that real estate agent, the easier it will be to find a search. Even if there are only 10 on the market right now, in that example, it's so much easier to identify that when it pops up and to jump quickly, which is a big thing in this market, is not falling into analysis paralysis once you see that opportunity, but being ready to jump on that when it shows its face.
Yeah. And speaking of analysis paralysis, I think that pharmacists, it's safe to say, are very numbers oriented. And so when I hear you guys talk about like criteria and is it worth it, I'm sure that many would be relieved if there's a surefire way to run numbers, identify, if an investment is a good one or not. And so you guys just released episode 50 where you talked about a spreadsheet analysis. That brings comfort to me as a pharmacist, right? I can put numbers into the spreadsheet and that can at least help guide me. Tell me a little bit about how someone can use math to evaluate an investment and what that looks like.
Yeah, the math, I think, sounds intimidating, right? When we talk about math, pharmacists think like aminoglycosides and like it gets really complex in a hurry. But when we talk about math on the real estate standpoint, it is relatively simple compared to what we do in the pharmacy world. There is a common misconception that as long as the rent is higher than the mortgage payment, I will be making money. And I feel like that's one of the key drivers behind the episode that we had to walk through the numbers and what are the other expenses that you may not be anticipating, but that factor in. And so things like paying a property manager if you choose to not self-manage the property, or paying for those repairs and those larger expenses, like we mentioned, the roof and the furnace and things like that, that if you own the property long enough, you will have to replace those things and setting aside money for that. There are a lot of other smaller expenses that are easier to overlook. And so again, that's kind of the driver of setting up that spreadsheet and not just setting that up to make sure that those categories are captured, but also setting that up with some notes in there to make sure that the information going in is good. If you have your estimates wrong on each of those categories, it's going to be a garbage in, garbage out kind of analysis, and it'll be hard to trust those numbers. So we try to spend some time in that episode to talk through what are those categories, how might you estimate those, how would you get a little more precise in that math so that you have a better idea of how you might expect that property to perform from an investing standpoint.
Yeah, really good point, David, about the numbers and not getting too lost in the spreadsheet. It's important to use, and it's a great way to start using math to evaluate a property, but you'd be surprised the amount of things that you can catch that don't have to do with math, right? Like maybe the property you're looking at is on the same street as another one that you like or another one you're comparing it to, but it just so happens to be right across the school district line. And so now it's not the same school district, which means it affects the property value or affects the rent rate. And so there's all these little nuances that can go along with it. And again, that's where your team can kind of come in and help you out. So again, relying on that real estate agent, relying on maybe a property manager to help with rent rates, and just taking a double look at things once you've done the analysis to make sure that it actually marches out in real life. If you're interested to, I don't think we dropped this here, but we mentioned on episode 50, we actually put together that spreadsheet that you can download yourself. If you head over to yourfinancialpharmacist.com/analysis, you can download that spreadsheet for free. Great way to, again, run the numbers the same way that David and I do.
Awesome. Thank you guys so much for putting that together. So again, yourfinancialpharmacist.com/analysis. We'll link to that in the show notes. All right. So we've talked about several things so far. We've talked about the importance of having a strong personal financial foundation before we jump into real estate investing. We've talked about the different categories, the aspect of forming the team, how you potentially find and evaluate an investment property. So let's transition to some common FAQs that you all hear from folks that are getting started in real estate investing. So David, first one here is, can I only invest close to where I live? Don't I need to see the house before I buy and drive by the house regularly? So this concept of investing in my backyard, or perhaps is there an opportunity to invest at a distance?
Yeah, it's a great question, one that we hear often, and it has come up quite a few times in the none to one course, particularly when we're talking with pharmacists that live in really pricey markets where it just feels intimidating to try to buy in that area compared to, like, for instance, the Midwest where Nate and I live and where properties are much more affordable than something on one of the coasts. So I think that the short answer is you don't have to invest where you live. It may be less intimidating to invest or to go through your first investment process close to you. And that's something that I did personally. We bought a house that was very close that I drove past on my way to work. And so it was just very simple to keep an eye on that and to feel that kind of sense of security until I started doing that and realized, like, I'm really not bringing a lot of value to this. Like, when I walk a property compared to when a contractor or a realtor walks a property, they see a lot more than I see. When I drive by that house, I'm like, well, it's still there. It hasn't burned down. Like, I mean, there's not really a lot of value that I brought to that. So we started over time in a area about a 45-minute drive from where I live, which I know to a lot of people, that's a daily commute, right? That's not super far, but it's to the point where we'll buy a house. There have been houses that I have not been inside or driven by because we just value that team so much and the team perspective that if the contractor has walked it, if the realtor's walked it, if the property manager is on board, there's, again, just not a lot of value that I bring to that equation. So again, even though it's not far away, we're investing in houses that are far enough away that we're not going there and we're not in that day-to-day aspect of the investing, which is really helpful when you work a full-time pharmacist job and you don't want to be distracted by your real estate investing.
And someone that does both in-state and out-of-state myself, I totally attest to that. Like, the ones that are out-of-state are so nice because I don't have to worry about them. And then the ones that in-state, you end up doing what I did, which was spend pretty much my entire Saturday painting and demoing a basement this weekend. So you can fall into that trap pretty easily.
You beat me to it, Nate. Before we hit record, you were talking about your time spent this weekend. I was just thinking about that, in terms of being in your backyard. David, one of the stories that I remember you telling early on, I can't remember if it was snow removal or mowing the lawn, but you had mentioned, that itch that, hey, I drive by this property, I see it all the time, and I maybe have a tendency to think like, maybe I don't have to depend on the team. I can save a little bit of money if I just shovel the snow myself, right? And obviously, as you build out a portfolio as you have, and of course, you've built out the team that has helped you, but that risk, I guess, if you call it that, can be real when you see the property so often.
Oh, absolutely. Yeah. I have vivid, terrible memories of like 6 a.m. standing there with a snow shovel because the house was halfway between where I live and where I work. And I'm like, I could just do this real fast. And then my feet are soaking wet and freezing and like all that kind of stuff. It's like, why did I just not pay someone the $5 or $10 or whatever it be to shovel this? Like, why did I feel like that was a good use of my time at 6 a.m? So yeah, some of this stuff, there is some healthy separation when you're investing just far enough out that you aren't tempted to go run and do these things yourself.
Nate, the second question here, and David hit on this briefly, but I want to come back to it, is, this idea of, is it a good investment if the rent is more than the mortgage? And what's the potential trap in that? And what are some things that folks could be looking for to help avoid that?
Yeah, I think this actually goes back to that spreadsheet we talked about. Was, it's not just simple numbers of, okay, the rent is $1,500 and the mortgage is $1,200. So cool, I'm cash flowing $300 a month. Like, that's not actually how the math works, right? We need to figure out a lot of the other factors that go into it, because this is, again, it's truly a business. It's an investment. And so it has to run itself. And by that, I mean that the repairs take care of themselves in terms of cost, the capital expenditures, big things like a roof or a furnace that breaks. Again, the investment should be paying for all of those. And so when we run the math on what a good investment property is, it needs to pay for itself every single year in and year out, and put money back in your pocket to be considered, again, quote unquote, a good investment property. So I think running those numbers is really important, and not just looking at the simple things, but truly diving into the details. And even though it sounds complicated, you can do this in 3 minutes, right? Running the back of the napkin math, and then get into the nitty gritty details if everything checks out.
Yeah. And we try to sneak into that spreadsheet a couple things too, like other rules of thumb that you can look at. For instance, you may expect that the overall rent, about half of that rent may go to general expenses like your taxes, your insurance, your repairs, property management, some of those things. And so again, if that rent starts looking pretty suspiciously close to the mortgage payment, I get nervous that that property is not going to create positive cash flow every month.
Next question, David, is do I have to do major renovations to a property? You know, I think that's one of the fears I know I had. I suspect many have is, you know, how handy do I have to be? And obviously some of the financial things that can come with this as well. So talk to us through this question.
Yeah, it's a great question because people that watch HGTV think that, yeah, all these investors that jump in and buy these houses, they spend, you know, hundreds of thousands of dollars on these extensive rehabs that take months and multiple crews. And it just feels super, super intimidating. We bought a house late last year that already had a tenant in it. It had just been fixed up. It was a great house, and we liked it for the simplicity of not having to do any kind of renovations to that property. So that's definitely an option. We've also bought houses where all we really had to do was go in and do paint and flooring, and for a few $1,000s, it was done. So you can do no renovations, you can do minimal renovations, or if you want to do a pretty extensive rehab, there is potentially more money to be made, and you could argue it's a potentially better investment, but it may take more time. So if time is scarce in your pharmacy world, don't feel like you have to do major renovations to a property to have a solid real estate investment.
Speaking of time, Nate, you know, I think one of the common questions that comes up is, do I have to work with a property manager? Could I save a little bit of money here and do this myself? Although recognizing that some time might be involved and invested here. Talk to us about that question of, you know, do I have to work with a property manager?
Yeah. And again, I'll bring in my own experience to kind of speak to this. I manage our local properties myself, and then the out-of-state ones, I absolutely push off to a property manager. So I have a foot in both worlds, and there are advantages and disadvantages to both. I like doing some of the property management here locally, one, because of the cost savings, but two, it helps me be a better manager of my property manager. I know how I want things to operate. I'm a very detail-oriented, nerdy pharmacist, right? I know how I want it to run. I know what my expectations are. And so I can put those same expectations on the property manager that I'm hiring. So it helps to do both, but it's not for everybody. I think, David and I talk to people all the time about individuals who will quickly identify, this is not for me, or I always want to be, have a hand in this. I want to be involved. I like talking to my tenants. It's across the spectrum. There's no wrong answer to this. I think a lot of it pans down to, what do you want to do and how do you want to operate?
Yeah, even when it comes to the property manager, I think one thing to consider is, what is your pharmacy job like? There are certain pharmacy jobs where you can be interrupted and take phone calls and manage things 2 minutes here, 3 minutes there. And there's others where you just absolutely can't. And so for me, I didn't want to be in a position where I had to take phone calls during the day. I wanted a property manager to create that separation. But again, that's not for everybody. If you do want to be a little more hands-on, you want to see those things, you want to be able to manage a little more closely, that's not necessarily something that you need to do. And you could potentially save money if you're willing to take on those property management tasks yourself.
David, last question I have here relates to financing. Nate and I recently did a home buying webinar. We also did a LinkedIn live session. And it seems like one of the topics that has a lot of interest relates to the pharmacist home loan products, where there's either a low down payment, or in some of the physician loan products are out there, a zero down payment. And so, often I think folks might be wondering, as we translate that from primary residence to real estate investment properties, are there zero down or close to zero down payment options for investment properties, or what does that look like?
So the short answer is not really, but kind of. So when it comes to real estate investing, if you are just going to go out and, like I mentioned before, finding a property that already has a tenant in it, that's already fixed up, the lending options are mostly putting a pretty decent down payment, 20, 25%, something like that, down on a property like that. That's the most common type. If you are trying to get into real estate investing with less money down, there are options that just take a little bit more creativity, or finding loan products that aren't quite as common. What we did in our first rental is we bought a property that we thought would be a good rental someday, and we moved into it and we lived there for a period. And then when we were done with that property and we were ready to move on to another personal residence, we kept that original property. And so that's where, if you're buying a property to live in with a zero down payment or a very low down payment mortgage, you can oftentimes keep those properties as rentals when you move somewhere else. And so if you do zero down to move into it personally, 2-3 years later, you do zero down to move into something else and you retain that property, that can, particularly in a pricier market, save you from that 20-25% down payment that can feel kind of overwhelming to save up for a real estate investment standpoint.
Great stuff, guys. We've covered a lot of ground in a short period of time, and I would highly encourage folks, if they aren't yet tuning in to the YFP Real Estate Investing podcast, each and every Saturday morning, a new episode goes live. Please make sure to do so. We'll link to that in the show notes. You can find it on Apple Podcasts, wherever you listen to your podcasts. Also, if you're not yet a part of the YFP Real Estate Investing Facebook group, we'll link to that in the show notes as well. Great opportunity to come together, a community of other pharmacists that are everywhere in their real estate investing journey. From, hey, I'm wanting to learn more, I'm thinking about it, to I'm actually pulling the trigger on the first property, to I'm beginning to build my real estate portfolio. So David and Nate, thank you so much for taking time to come on the show. Really appreciate it.
Yeah, happy to be here.
Thanks so much.
Before we wrap up today's show, let's hear an important message from our sponsor, Insuring Income. If you are in the market to add own occupation disability insurance, term life insurance, or both, Insuring Income would love to be your resource. Insuring Income has relationships with all of the high-quality disability insurance and life insurance carriers you should be considering, and can help you design coverage to best protect you and your family. Head over to insuringincome.com/your financial pharmacist, or click on their link in the show notes to request quotes, ask a question, or start down your own path of learning more about this necessary protection. As we conclude this week's podcast, an important reminder that the content on this show is provided to you for informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in the podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. We urge listeners to consult with a financial advisor with respect to any investment. Furthermore, the information contained in our archived newsletters, blog posts, and podcasts is not updated and may not be accurate at the time you listen to it on the podcast. Opinions and analyses expressed herein are solely those of your financial pharmacist unless otherwise noted, and constitute judgments as of the dates published. Such information may contain forward-looking statements which are not intended to be guarantees of future events. Actual results could differ materially from those anticipated in the forward-looking statements. For more information, please visit yourfinancialpharmacist.com/disclaimer. Thank you again for your support of the Your Financial Pharmacist podcast. Have a great rest of your week.